Okay, we're going to kick off this week's Chroma Team Roundtable. Welcome, one and all. As most of you already know, on these conversations, we like to talk through the market, what we're looking for in the charts, and also give you kind of an overview of what we'll be looking for in the next 7 days. We like to do a mix of technicals and fundamentals, which is why we have some very, very smart gigachads in here, like Jedi, and some guys who draw lines on charts like myself. And we kind of try and give you a rounded view of where we see the market today, where we see it going over the next 7 days. Of course, these are weekly discussions, so the idea is to set you up as best as possible for the next 7 days, give you an idea as to what you should be looking for, what your bias could be, depending on a variety of factors, and what our own biases are. So, with that in mind, I'm going to kick off. We're talking first of all, I suppose the hot topic right now, we're going to get straight into it, is we just got US labor market news. It was a revision of jobs market job market data. Is the biggest revision in like 15 years, I think, or I saw something online, maybe the biggest revision on record. It's a sign of a weakening US jobs market, which makes rate cuts more likely. This is something that we've spoken about already. I spoke about it in my channel last week. But it also might be an indication that the rate cuts are coming maybe at a time where the Fed is playing catch up, or the Fed is too slow. Jerome Powell has been too slow cutting these rates. Lots of people talking now about 25 bips being the consensus rate cut, and maybe even talking about something more extreme like 50 bips, which I still don't think is very likely, but certainly not impossible, not as impossible as it looked a few weeks ago. So with that in mind, I'm going to go straight to Jedi because I see he just turned his camera on, so we can all enjoy his beautiful face and get your thoughts on what this all means for the market, Jedi. I think you're muted.
Apologies. Good afternoon from the southern tip of the African continent. It's nice to be here with you guys. I think between you and Oz, I'm definitely third in line for good looks, but I'll take the compliment. Thank you. To answer your question, I think I'm going to take it from somebody who's in another chat with me in Telegram, who is US based and is quite an astute investor, and his whole take is that the Biden administration have been cooking the books, and he's obviously adamant that they've been lying about it. I think 50 bips isn't out of the realm of possibility. I don't know what Oz thinks about that, but I think it's definitely a conversation that's going to be had over the next few days. Essentially, what it means is that the jobs market's pretty cooked, and the only way that they can potentially save the economy is to drop those rates, because there's just not going to be enough capital around because people don't have enough jobs. So it should be bullish. I have no fucking idea why we had this dump right now immediately afterwards. It's just weird how it's played out, like short term. But I think Ghost Month is not looking like Ghost Month anymore. I think if you look at the data at the moment, we are looking at quite a lot of people making a lot more money in the last 10 days than they have probably in the last 2 months. So, yeah, that's my take on the jobs thing. It should be bullish. Let's see how it plays out in the next few days. I mean, we've got some big news coming tomorrow. I know that Oz has got his finger on that pulse. I'll let him talk about that.
Yeah, PPI, CPI, and FOMC all coming in the next 8 days. We have PPI tomorrow, CPI the day after. So definitely a lot of high impact news on the horizon. What are you looking at, Osbra?
So first of all, obviously PPI. We all remember the impact of bad PPI numbers, bad PPI figures. The last time we had this data coming out, so the market basically nuked straight from all-time high to 110, between 110 and 107. So very important news. They're expecting a decrease, a large decrease, and I think it does make sense considering the last manufacturing PMI that we had, that was slightly decreasing, especially if you looked into the details. Then we have CPI. CPI will also obviously be major. I'm expecting a decrease. I know they're expecting the CPI to be higher than the last month and higher year over year. But for some reason, I'm expecting a decrease, not just guesstimating. It's because oil prices have an impact on US inflation, obviously, on how it's calculated, and the US and the oil prices just nuked in August. So this is why I think the impact will be significant enough to send the CPI a bit lower than expected. That would be a good surprise. However, you mentioned the labor market, and that's very important. I don't think the eyes are on the inflation now. I think eyes are on the job reports basically. That's what is driving the market right now. We see the reaction of the market anyway on the charts when we have job reports. It's very important, and as you said, to confirm, it's the biggest revision in record in history. That's the biggest one, NFP revision. So that's pretty damn bad. Why the market is dumping, to answer what Jedi said, simply because when we have such bad news for the labor market, it's always the same. People are scared about a potential recession, even though recession has a technical definition. You cannot have a recession when you have the growth domestic product that we had the last month. It's not possible. The last quarter. Still, people are freaking out, and the market has been quite excessive this year. I think we can say this year, the way it was reacting to news, and this is why we're having a dump. However, I do believe we remain bullish for September, even though obviously after a nuke like that, things look a bit nuanced. But I do believe it's still bullish. The Fed will be forced to cut, and today is probably the nail in the coffin for Jerome Powell. Is being like, the pressure is too high after such a revision. Also, remember that Trump is playing a chess game, like some tough chess game, but still a chess game with Powell. He fired that person in charge of the labor market statistics, and he replaced that person, and now we have job revisions going going in favor of rate cuts. So now we have 100% according to the CME Fed Watch tool. We have 100% chance of a rate cut of 25 bips. October is also pricing at 80% a rate cut, and December is around the same. So, and the latest report from big institutionals were also like predicting 3 cuts for the end of the year. So most likely, to end this little macro talk, you want to pay a lot of attention to inflation figures. If you have anything lower than expected, you can definitely expect three rate cuts. 2 to be conservative, 2 I would say, but 3 is definitely not out of the table. And I think that will be the catalyst for more upside on the risk on assets, so stocks, indices, cryptos. And I'm definitely not surprised to have a dump right now. It's always like that before a good FOMC. We always have a dump. You can check what happened last year before the 50 basis points cut. We had a dump, and then magic rate cut, and the market was sent to Valhalla for like 3 months. So let's see if we have the same playbook. But this is how I see things for the next couple of weeks.
Thank you for that. Purdue, we have CPI tomorrow, PPI the day after. How are you positioning yourself for these high impact news events? What are you looking for in the charts?
Yeah, I completely agree with Osbra. Actually, this is the best case scenario that we're dumping into the data, as we saw a nice extended pump on Monday, and now we see the typical de-risking. Usually, when the de-risking started earlier, and like you're starting pumping into the event, it's usually gonna be really bloody on the event. So for me, it's the best case scenario at the moment that we're seeing some de-risking into the event, probably some hedging from all the hedge funds, and that we probably pump out of the event again on the CPI data. I think the PPI data is like not that important at the moment, but the CPI data is always the big catalyst for the markets to show its hand. So I think we see some good PA again after the CPI data, no matter what it's going to bring. If it's going to be really crazy, like we saw with the data coming out 2 weeks ago, like a complete miss on what the consensus was. Okay, yeah, then we see some really strange PA. But usually, the typical playbook is dump into the CPI data and like start the relief rally again after the CPI data. So yeah, this is actually the best case scenario for me. If we start rejecting here and see some lower prices. The only thing what I don't like is that the pivotal level 112k for BTC, and for me 4300 for Ethereum, purely from a technical analysis perspective. We're losing that level at the moment, so that's a bit worrisome. But there are still some good alt plays that happened last few days, which means that the risk appetite is quite high in the market. So yeah, I'm still leaning that we're going into a really good quarter next Q4, into a nice end of the year rally.
Yeah, definitely. Alts have started, some alts, not all alts, I suppose, and that's kind of indicative of the cycle we've had so far, but have definitely started waking up in the last couple of weeks. Some alts starting to look very good. And yeah, kind of setting up for an interesting Q4, like you alluded to there. If we can kind of, I don't know, I just feel like the market is still like news. Obviously we have some big red tape news events this month. Everyone's still talking about Ghost Month, talking about September seasonality. And even if those things don't actually affect the market directly, the fact that enough people are talking about them is enough of a psyop that I think it has people spooked. So, yeah, I do think September will probably still be a weird month, but definitely shaping up nicely for Q4. Victor, what are you looking at in the charts?
Yes, that's what I'm looking at. I'm looking at the charts only because we've discussed this many times, but I think just news delivers price to where it's supposed to go. At some point, of course, if you have unexpected news, then yes, it's going to change the direction of price. But I'm still looking at BTC like a range between the monthly high, where we also have equal highs, and the monthly low, where we have equal lows. I've also looked at the stats from Brighter Data, and it's basically saying nothing, as in the sense that it's not, we don't have any bias whether or not the monthly low or the monthly high will get taken first. One of them will for sure get taken, or maybe both as well, but we don't know which one will get taken first. So yeah, just play the range in my opinion. But what I found very interesting, I forgot to mention the huge weekly fair value gap above the monthly high. This is going to be a very important POI for me to look at, maybe short. But what I realized is that H4 fair value gaps this month have been incredibly telling of where price will go next, because we started with this one, respected, it was bullish, and we continued going up. Then once we printed a bearish fair value gap, we started going down, and that was normal. Then inverted the bearish fair value gap, we flipped to bullish. Inverted the bullish fair value gap, flipped to bearish. Then again, inverted the bearish fair value gap, two of them actually, created the bullish fair value gap, then this was bullish. Then a bullish fair value gap held, that was bullish. Bullish fair value gap held bullish. And now what happened? A bearish fair value gap, a bullish fair value gap failed. I mean, it will be confirmed in 40 minutes, but I don't think we're gonna be able to buy back almost 1K in 40 minutes. So yeah, this means that for now, at least, I'm leaning slightly bearish while inside this range, because we also retested the range value area high, which is another resistance POI. I'm not shorting, by the way. I'm just trying to see where we are moving inside of this range. So yeah, my bias right now is to not play this stuff in the middle. Wait for some external liquidity to get swept, hopefully fueled by news, and that's when we act. I'm not trying to predict if PPI will be bullish or CPI will be bullish, or how price will react to FOMC. I'm seeing how it reacts to these news, and then I'm playing according to what I see in the charts. But for now, H4 fair value gaps are very powerful, and they are telling the story. So now I'm looking at the POC of the range. If we fail this, then I'm looking towards the rotation to value area low. If we hold it, then yeah, I guess it's still bullish technically, but yeah, that's my take on what we're currently seeing.
Yeah, great analysis there, and something you touched on, something I mention all the time. Don't be a predictive trader, be a reactive trader. I think I made a post about it during the week. I
Yep.
really started making money in trading once I stopped trying to predict what price was going to do. Once I stopped trying to look at the charts and tell the future, and once I just started reacting to what the information the market was giving me, my profitability increased quite a lot. So something to be aware of, something we speak about all the time. It's not news. Just try and react to what the information the market is giving you rather than trying to predict what that information is going to be. Tim, what are you looking at in the charts? Are we bullish here? Are we bearish here? Are we sitting on hands? Are we getting into positions? What are you looking for?
All right, guys. I as much as I hate to say it, and you all know that I've been long up until this point, I have to agree with Vic here, I think.
Did your mic cut out, Tim?
Internet right now, by the way. I have an issue with my internet at the moment, I think. Can you hear me?
I can hear you now, but it cut off for about 3 or 4 seconds.
I've been having issues with my internet today, so let me know if it cuts out. Any resistance that we've had up until this point has just held up, right? So I have to think that here is possible that we do push down. We had a nice rejection here on our Monday high. That's what this level is. And if you drop down time frame, it deviated quite cleanly, to be honest. So I'm sort of expecting BTC to get at least right here to this Monday low. And if that fails, I'm expecting this previous range high around here at 108.366 pretty quickly. If that's lost, then I think we see 100K very fast. I also have to disagree with the 100% certainty that most people seem to have with rate cuts being bullish. I see it more as 50-50. It could be a sell the news event, and I'm completely prepared for that. So ideally, what I would wait for is this is painful, right? This is just painful chop from BTC, and alts have been doing nicely. They've been performing well and play the chart. By all means, I have been myself. I had a nice FET long, and I got a nice pop off a fart coin long. But playing them by ear. I'm trying to TP quite aggressively, and I just I don't like that. I don't like that. And if we lose Monday low and lose 108 right after that, I would say that it's an aggressive sell off, and I'd be quite careful. There's a lot of news coming up, and I'm not pushing it. I don't want to rush anything. If we are to get long on the BTC side of things from here, I think it'd be quite clear. It would almost be sort of like an inverse head and shoulders play, right? Starting to get a series of higher lows. Monday low holds here. You flip Monday high, and you get a push up from there. Ideally, that's what I would want to see to feel more confident in longs. That's pretty much it. I don't think that we should be absolutely certain that rate cuts will be bullish for us. I think that we should get long if longs on the chart present themselves and they give you clear invalidations. Always take the trade, right? Because altcoins could be waking up. We just should approach with a certain level of caution here because so much news incoming. We do not know how rate cuts will affect the market. I didn't like that job revision. That was huge. That could put some fear into the market, I think. And maybe we sell off a little bit and chop to the downside in September, and maybe we start getting a nice pump in October. That's totally possible too. And I think that that's something that people should kind of look out for as well. Don't expect just because we're out of summer and everyone's bullish for rate cuts that we will go up, right? Play it as it comes. Play the structure. If you get nice expansion away from your levels and you have a clear logical long, then take it. But approach it cautiously, please, because I've seen this happen several times before where everyone was super sure that we would move up, and everybody just gets blown apart. That's pretty much it for me.
Yeah, thanks for that, Tim. And that raises a question which I had. I'm going to flip this over to Jedi. So, Tim, mentioned something interesting there, which is, don't assume that rate cuts will be bullish, and that's a question that I have, and I'm sure lots of our audience listening has. I'm just looking. I just posted something in the chat there. It's the CM Group target rate probabilities for the FOMC meeting in 8 days. They're currently giving a 92% chance of a 25 bip rate cut and an 8% chance of a 50 bip rate cut, with effectively a 0% chance as things stand of rate cut of no rate cuts of rates staying the same. So we can deduce from that data that rate cuts are going to happen. The market consensus is that rate cuts are going to happen. Why then, or at least the perception, if the perception that rate cuts are going to be bullish for the market, why then has the market been so indecisive in recent weeks? We saw Jerome Powell had set the stage for rate cuts like 2.5 weeks ago when he gave that speech. Was it Jackson Hole? I'm not even sure. On a Friday, and we saw that whole move retrace the following the following Sunday. We've seen a lot of choppy price action in the last couple of weeks. I guess the question is, if rate cuts are bullish and rate cuts are consensus now, why hasn't the market reacted in the way that people think that it should be reacting?
I think the question should be more, why is the market so schizophrenic? And is it because of what the macro environment is, or is it more a case of a sophistication that's creeping in that actually doesn't afford us the opportunity to actually see any significant moves, but it's more centered around higher frequency trading. It's centered around max extraction, even on small moves, assisted with bots, assisted with AI. Is that what's happening right now? Maybe, maybe not, because I haven't seen really anything sustainable like across the board. Yes, we've seen sustainable moves in Bitcoin. We saw a really nice sustainable move with Ethereum, but right now Ethereum is standing still. You please explain to me what the hell is going on right now with Ethereum in light of all the liquidity that's supposedly on the table, and then maybe we can answer your question. I don't know what the answer is. It just seems like maybe there's OTC deals going down. Maybe there is such a sophisticated ability for traders with the right machinery coming in and exploiting and extracting with precision that doesn't afford us an opportunity to actually see like sustainable moves. I don't know. Maybe I'm talking absolute shit right now, but it's like I've been here for quite a long time. And if you compare this to what we saw in 21, 22, it's a completely different reality. Yet we've got liquidity. We've got a $4.5 trillion market cap, across the board. It's not like there isn't stuff happening. We've got institutions piling into stuff, yet we're not seeing, even on the majors, we're not seeing those moves. So I don't really know what the answer to the question is. I'm speculating right now. I think the correct way to approach it in light of your question is, let me rather be reactive as opposed to trying to predict what the future is going to bring, because I think trying to predict what's going to happen nowadays is super, super difficult. I mean, you've got a perfect example around Hyperliquid. Hype is probably one of the most valuable cryptos that we've seen in the history of this industry. I mean, it's insane. Like these guys are literally printing money every day. They have insane revenues, yet this thing gets sold off so aggressively. I mean, if this was 2021, this thing would probably be at 100 bill market cap already. So I am rambling now, and I do apologize, but it is a really good question, and I'm not entirely sure what the answer is.
Yeah, I mean, I think a lot of us are kind of in the same situation where we're trying to find answers and the market isn't giving them. But it's definitely something to consider, because I think that was the consensus, a month ago, and even right up until Jerome Powell gave his speech, and we saw the market react to that. Jerome Powell set the stage for rate cuts. Everyone said rate cuts are bullish. These are the rate cuts we've been waiting for. This is the path to new all-time highs. This is the path to alt season, whatever it is. And the market then retraced the move 2 days later. And I think at that point, for me at least, there started to be a disconnect between my understanding of, or my fundamental analysis read on the market and my technical analysis read on the market. Up until that point, I think they had largely been in sync. Since that point, there's been a disconnect that I am trying to reconcile with varying degrees of success. And talking to you, smart individuals, is one way of doing that. I'm going to go over to Osbra. Osbra, you've posted something in the chat there that I was quickly trying to read through and failing miserably. You're talking about quantitative easing. You're talking about the Fed's balance sheet. Can you talk us through that maybe and how it pertains to this discussion?
Yeah, exactly. It's a direct answer to, like, almost direct answer to what Tim has been saying, and a comment to Purdue's comment in the chat. Historically, rate cuts have always been bullish. Of course, if you look at like 24, 48 hours span of, if you look at like a M15 or H1 around the rate cuts, yeah, that there could be some movement up and down.
Can you guys hear Osbra?
He's still talking.
I can't
I
hear
can't
him
hear
either.
him.
I can't hear him.
No, I can't hear him either.
Osbra is also in Uzbekistan. Yeah, your camera's gone off as well, Osbra. I don't know. Maybe your internet is encountering some difficulties.
Everyone is getting cursed by Vazi.
I know. Yeah, ever since Vazi came into the server, everyone's been experiencing internet difficulties. It's like she's she brought some kind of internet curse. I no, we can't hear you at all, Osbra. I can't hear you, and I can't see your camera either. It's just turned off. So Macron cut the internet. In any case, we'll move on slightly. So maybe we'll pivot slightly. I think that's a kind of a good basis on which to go into the second part of the discussion, which is just talking about, let's say, maybe the charts that we're looking at, the charts that we find interesting. And I'm going to go over to Purdue here because he is, of course, the altcoin sniper, the guy who usually has some fantastic reads on the altcoin market. Now, I think that sometimes market conditions like this, Purdue, and maybe you'll agree or disagree, can be quite difficult for trying to find clean setups on altcoins because, as we all know, altcoins, they're higher beta plays than Bitcoin or even things like Ethereum or Solana. A lot of these altcoins are pretty volatile, especially when the market is uncertain, as it appears to be at the moment. So it can be difficult to find clean setups on alts. Usually, you want to see a little bit more stability in Bitcoin, in the S&P, in order to find clean setups. How are you navigating that this week?
Yeah, it has been pretty difficult indeed, because usually you see a bullish or like a stabilized BTC. That's why I was also hammering on BTC holding that 112k level, because you want to see, usually when I trade alts, you want to see the higher time frame levels to be held. Like for BTC, the pivotal level for me is 112k. For Ethereum, it's 4,300. And usually the first red flags, if the majors can't hold their support, usually this will turn into like a risk off environment again for altcoins as well, which we have been seeing actually since New York Open, where a lot of altcoins retraced like at least half of their move. And for now, usually altcoins follow. It trickles down the whole um, the whole chain, to be, like, to say it like that. So for me, I was really bullish on altcoins yesterday and today in London session, but now you definitely see also with the new tensions in the Middle East that people are de-risking. You have a lot of uncertainties at the moment, like CPI data, FOMC data, the FOMC meeting, and now also on top of that, the uncertainties in the Middle East, because Hamas is, I'm getting all these notices, is attacking, and they're like doing a bunch of shit in the Middle East I don't know much about. So I might just go risk off again and wait for the next opportunity. But there were still some really nice moves on newer altcoins, but I think it's still so inflated. Like I counted 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 18 new listings since last Thursday. So yeah, it's really hard to keep on track on these new listings, and it's not good for the market, because eventually not all 18 coins will go, and you really have been picky. Like Open, which we saw pumping yesterday for like 60%, it retraced the whole move and is now even lower than the initial listing price. So it's the Wild West out there at the moment, and I really want to see a nice uptrend on BTC before I really go risk on again on altcoins. It's yeah, the Wild West, definitely.
Yeah, I agree with that take. Probably depending on the kind of price action we get into the remainder of the day, could be time to switch from offensive to defensive. And these things
Yeah,
happen very
yeah.
quickly. I think that just last night we had Crypto Joey in Crypto Chat. He spent about 3 hours convincing everyone that BTC is going into 150K, and this was the time to try and risk on as much as possible. I don't know, how much that has changed. I know that's a pretty high time frame outlook, but BTC nuking, $2,000 in the last hour or two certainly probably doesn't help his case. Something I just want to get your opinion on, Purdue, is obviously a coin that I've been looking at quite a lot over the last couple of days, and a coin that people have been looking at is this mix coin, this MYX coin, which is like I can't even do the maths. It's like up. Here, let me just do it now. 18,000% in a month. That's not a typo. I
Crazy.
have not misread that. It's up 18,000% in a month. It has gone from under 10 cent to now close to $17. So
Crazy.
what is your opinion on not just that coin, but those types of coins? Like, do you look at them and say, "Fuck, man, I wish I got involved," or do you look at them and say,
Oh,
"Maybe this is going to be a short"? Do you look at them and say, you know, like how do you approach that? Because a lot of the guys look at those coins. I know that I saw guys in my Twitch chat yesterday and guys in crypto chat who were saying, oh, the short is going to be great. Like I can't wait to short this coin back to zero. And I don't know, is that necessarily the smartest way to? I woke up this morning and it's plus 30% again. So anyone who shorted yesterday got blown out. So how do you approach coins like that?
yeah. When we're talking about this, I already get goosebumps, but because these type of coins make people believe in crypto again. This is literally what we're here for. This is the first time we actually see such a crazy pump again, and it makes people believe again. Like, everyone lost hope, and this was like in 2020 and 2022. This was the usual thing that like one catalyst, or people think, oh, this is the next hype, which it probably is, because it's also a DEX. And they jump on it like a madman, and you still see that there's so much money in this space, and so much opportunities, and people will look again for these opportunities when this thing is all over X again, and they're gonna look like, oh shit, I missed that one, but the next one I'm gonna be in. And I think all that belief in our space again is in the short term, midterm, long term very bullish for the upcoming months to be had, because people miss this opportunity. But once they see, like, you have also today the launch of Avantis. I don't know if I said it really Dutch. AVNT. It's also a DEX. So I'm really, really looking forward to see what will happen there. And it's also it belongs in the same category as Mix. So yeah, I think this belief in these type of coins and seeing these insane pumps makes the space a lot more greedy again trading altcoins, because now they see, okay, I missed the BTC pump from, let's say, our bear market lows to these new highs above 120K. But on altcoins, there are many opportunities still. So that money will flow eventually to our beloved altcoins. But yeah, like I said earlier, you still have to be really picky on which coins to buy. You have to look at the tokenomics. Is the team delivering? Does it have any USPs in the market? So yeah, but that's what we're here for, and that's something I'm really looking forward to discuss tomorrow together with Jedi.
Yeah, that's going to be a good
Yeah.
one. Reminder, everyone, if you don't know what Purdue's talking about, tomorrow at 11 a.m. UTC, we have the first ever Chroma Alpha Team live stream, and I am looking forward to it very much. Going to be a ton of alpha dropped, needless to say. But yeah, we can focus on that tomorrow. For now, we're still in this roundtable. I want to go back to Victor. Victor, you mentioned you wanted to discuss something about. So I'm just scrolling here in the chat
Yes, so the news
about
events.
news being priced in and what that means.
Yeah, yeah, for sure. I want to share my screen, but apparently it's not letting me. Ah, that's strange, because no one is. Oh, okay, I switched on my camera, but I still cannot stream. Um, anyway, it would have been an easier example with me drawing lines on a chart, but basically, why seldom news events happen is because, let's say we all know, everyone knows that we will get rate cuts, and everyone agrees that rate cuts are bullish. Now, in a hypothetical world, everyone would wait, and then on news release, when we get the rate cuts, everyone would buy. But that's not what actually happens, because investors are looking to be early, so they are buying before the bullish news. So this drives price up. So when we eventually get the news, then those people that bought earlier will sell for profits because price pumped into those bullish news. And this is what happens when, this is exactly what happened when we had the BTC ETF release. And we see like an initial spike from the algos because there are still algorithms that are gonna buy BTC if we get rate cuts. But then immediately you see a sell-off, which is what happens, like I said, because those earlier buyers are TPing, and then ultimately the market will decide if those rate cuts were bullish or not bullish enough and will dump. But that's what happens, let's say, in the first few hours after an event that we know is going to be bullish. Maybe it won't be the most bullish one in the beginning because you get those old investors selling, and yeah, that's basically how priced in news work. And like I said, the best example for that is the BTC ETF release on January 11th, 2024. We pumped like from 20K to like 40K in anticipation of that. And then we saw a dump from 40K to like 35K in the following days. And then ultimately, you guys know what happened. We rallied to 120K.
Yeah. So what date was that?
January 11th, 2024.
Okay,
I'll
nice.
post
Maybe.
the chart right now.
Yeah, that's a good example. Thank you for that. Osbra, is your internet working again
I think yes.
from your
I think so
third
too.
world country internet connection?
Yeah,
I heard the government
definitely.
collapsed,
It
right?
seems,
Yeah,
yeah,
you have
government collapsed.
the government collapses and you lose your internet. It's not a coincidence.
Yeah, not
Do you want to
coincidence at all.
do you
Absolutely.
want to finish your point? Sorry, I know you just kind of started talking about
Yeah,
quantitative easing.
yeah. So I was just saying historically when we had quantitative easing, so basically rate cuts, consecutive rate cuts to until we get low rates, and the Fed increasing the balance sheet at the same time. So basically increasing the balance sheet for the Fed means like a buyback in crypto. This is the example I gave. It's like they are buying stocks to support the stock market, basically the financial markets. And as you can see on the post that I shared with data and historical facts, it has always pushed the prices to the upside. Yes, we had a movement to the downside around the rate cuts, but everything is about context. This is very important because a lot of people are saying, especially on Twitter, but is it surprising? Not really. But rate cuts are bearish. In fact, it's not. It's the context that is bearish because people look at obviously well-known dates, historical financial moments like the subprime crisis, for example. Just a gentle reminder that during that period, hundreds of thousands of people were just living in the street after the crisis struck. This is why the financial markets dumped. It's not because of the rate cuts themselves, it's because the rate cuts arrived to save basically someone that was almost completely dead, the global economy, right? And this is why the market nuked. It's all about context. It's very important. It's not the rate cuts themselves who make the market tank. And I was saying, obviously, if you look at low time frame, it depends on what's your perspective, your investment perspective. Is you're like more focused on day trading, or if you're more focused on what's gonna be up for the next 6 months, then the start of a quantitative easing is always bullish, and it goes higher and higher and higher until we reach until we face a new issue. And most likely the new issue is always the same: inflation. They are all concerning the inflation. This is what we had in 2021, for example.
He's
I think
dead again.
I think he dropped. Yeah. R.I.P. Uzbekistan internet.
I wonder, is it
So
maybe
much
because we all
for
have our cameras on?
I don't think so,
no, it's
man.
his connection, dude. I live further than any of you, and my internet is fine. There's something wrong on his side.
Yeah, that's what I thought. Um, Tim, if you're still online, I'm just wondering because I know I've seen you trade a few different coins the last few weeks. We spoke about bias, we spoke about flipping from bullish to bearish. How are you navigating this current? Let's be diplomatic and call it market indecision with regards to the trades you're taking.
Every one of my trades that I've taken recently was a long, and they were all based on BTC testing its prior range high. I had high conviction in that high time frame level, so I just tried to take what seemed like every structural low and play alts off of it. So far that's paid off pretty nicely, considering BTC is kind of just stuck in a small range, and some alts are really breaking out of what could be some key levels. So I think, you have to keep in mind how high does BTC really run this cycle? And the answer is no one knows, right? Unless you're pulling out your Fibonacci and hitting your 1618, then there's no way to really know something like that. So I think the best way to really attack the next leg of the market, if there is another leg up on the market, would be alts. A lot of them, how much lower can they go? The levels are clear. You have very nicely defined range levels. Lows that if they're lost, then it's gulag, right? Um, that's really good invalidation, and I think that we can use that really clear invalidation on altcoins to get the best risk to reward scenarios. Now, don't get me wrong, you can scalp BTC, but you only have so many levels on the chart with prior data, right? So, you know, we're maxing out at 120 unless you're just gonna leave a runner and hope you get 145, 150, right? What's your risk to reward there? So if you really want the high risk to reward plays, I think you have to, take the Purdue approach, look for new strong altcoins that have a lot of room to run, or look for alts that have very clear invalidation at levels that can't be lost. That's my approach. I think the AI narrative in crypto is still yet to really run with BitTensor and FET and all the higher market cap ones. Um, they've they've really underperformed, to be honest, considering what Nvidia is doing. I mean, I would say, right? So I think it's smart to keep your eye on those. I think Osbro, you're keeping your eye on BitTensor, right? Oh, he's gone. That's right. I
Yeah,
think
he's
I saw.
internet rugged.
Yeah,
No, sorry.
there you are. I think it's wise to still, if we're gonna get another leg, keep your eye on the AI narrative. Alts that have clear invalidations, that can't lose their levels, or alts that are obviously relatively strong. And try to time those altcoins with BTC bouncing off structural levels during its chop.
The financial, the economic markets and stuff around Trump. I'm really, because we hear only the bad things about Trump, of course, but I'm just really curious how it is on the streets, and how everything is like. You're the only one that is experiencing all that by yourself over there. Is it like really that bad at the moment, or what's it about?
I would have to say that everyone here is brainwashed. It's very controversial. It's a controversial topic when you're speaking about these issues with even your family members because social media and the news that's run on TV does such a great job of forcing you to pick a side and manipulating your emotions to think one way or another that is kind of almost a militant topic to speak about with people, even the closest to you. So it's really a loaded question. Nobody really knows because nobody can really talk about it. It's always an argument. I would say I can tell you what I notice with the economy. Our prices are insane. Our rent is crazy.
That's what I was wondering. Yeah.
Yeah, I was renting a home because I don't like to be too tied down, but like the prices I was paying to rent were insane. Like I was willing to pay high interest rates to finance myself a nice home to put on the land that I already had purchased and cleared. Um, I mean, people. I don't know how people are living. I just don't understand it. I don't live outside my means. I live in a nice home. Don't get me wrong, but where I was renting was nothing insane. It was in a big city, but it was triple what I paid in 2010, even.
Crazy.
So food prices are probably tripled, quadrupled since before COVID. A lot of people are on welfare and food stamps. The economy, in my opinion, I don't see how it sustains, especially the housing market. I just don't understand it. There's a lot of arguments about immigration and how we have apparently total with visa holders over 50 million over 50 million immigrants in the country, including illegals, which they're estimating between like 15 and 22 million, but there's no way to know this number, I don't think. And they're saying this is greatly contributing to our housing crisis, and that's one of the reasons they're trying to crack down so hard on immigration. A lot of the people that are illegal are in high levels of constant fear because there's a lot of raids going on in workplaces. I know this because my wife she's an immigrant and I'm her sponsor to become legal, and we have a son together, and it's like her only saving grace that we have a son together, that she doesn't have to worry about the risk of deportation. Still a major headache. So I would say the Hispanic population in the United States takes up a large portion of our economy. And if they do deport the numbers of Hispanic people that they would want to deport, ideally from the Trump administration, it would probably cause some form of labor market collapse. There would be jobs, but the people who are citizens do not want to do these jobs because they're low paying jobs. And it would be an influx in jobs, but it would force people into these lower paying jobs with the high prices of homes. It just, I don't know. I don't know how we're sustaining as a nation at the moment, to be quite honest with you. So I don't know if that gives you any insight, like to what's going on here as far as our economy and our housing market and all that, because like I said, a lot of people they just argue about it all the time. It's a constant debate with everyone, including all the way down to your loved ones. Like my ideals and beliefs in the way that our government is run at the moment is very different from even my own stepfather and mother. Like we don't talk about it because it's just so conflicting. And if you turn on the news, they're going to twist you one way on this channel and you flip to the very next channel and it's completely opposite. And they're both like hyping people up to the point to where they'll fight over it, man. I'm telling you, it's just crazy.
Lots of bipartisan politics I notice in the US. It's very much compared to 30 or 40 years ago. It's very much us against them, and if you're not with us, you're against us. I think that has been an ongoing process that has really exacerbated in the last decade. Obviously, I'm speaking from an observer, a foreign observer, but that's the way it seems to me. In any case, I'm just conscious of time here. It's a very interesting discussion, by the way, but I'm just conscious that we're kind of running into the last 5-10 minutes. So I just want to wrap things up. And I'm putting this out to the floor. Obviously, we have some high impact news this week. Obviously, we have rate cuts almost certainly coming in 8 days' time. We had, jobs data today. Just watching the charts here, BTC after pumping $2,000 yesterday this morning, I should say, during Asia session, consolidating during London, and now nuking back down to sweep Asia low during New York session. There's obviously a lot of volatility in the market. There's obviously, Jedi spoke about there being a certain amount of indecision in the market, which I really like thinking about the market in those terms, right? We're trying to think about what way is the market leaning going into these big news events, and I think indecisive is a really good way to put it. How should people be positioned? And this is a question for the entire panel. How should people be positioned for the next 7 days, right? These are obviously weekly calls. Before the next roundtable call next week, what should people be doing over the next 7 days? What should the playbook be? How should people be positioning? How should people be protecting their capital? What should people be doing?
I think just to kick it off, I think it comes down to whether you believe we're going to have a good Q4. If you believe we're going to have a good Q4, then right now, if you're not positioned, then you want to see a massive nuke so that you can pick up the high conviction plays that you might have. Whether it's going long with a low leverage, which you can obviously ride out any volatility, or whether you go spot. That's something that I'm looking at. Like I'm kind of like getting on my knees and praying that hype does like a major nuke. I'd love to get more of it. I think Solana is going to do really well as well. I think it's definitely showing that it wants to lead the charge. I haven't written off Ethereum, even though it's been really, really shitty the last kind of 3 to 4 weeks. So I'm looking at, what's of interest, what do I want to be involved in, and it's just about adding. I believe we're going to have a huge Q4. I'm not feeling as kind of cautious as everybody else is, and by all means, I think it's important to be cautious and to manage your risk. I'm doing that, but at the same time, I'm also feeling super bullish. So I think tomorrow is going to be a big day. I think it's going to be fireworks, and then from that point onwards, I think we'll get a good indication. I'd like to think by the end of the week as to where we're going for the rest of the month. I'm going to be paying close attention to you, Folis, definitely to Vic as well, and Tim and Oz. So I'm going to be hearing what they're saying from the kind of like from your chart perspectives. But I'm hoping that we get like a bit of downside, and then give us a chance to collect some, and then hopefully ride into Q4 and start selling towards the end of November.
Appreciate that, Jedi. Same question goes for the remainder of the panel. Do you guys have any answers to that question as to what people should be doing, how they should be positioning over the next 7 days?
I think
I
they
can
should
try.
not be positioned.
Yeah.
I
You think
it's a matter of
sitting on
waiting.
hands?
Yeah, especially with the way BTCPA has been ranging for a while now. I think the only good levels to play are, like I said, monthly high and monthly low. And if news delivers price to those, then we try to act. But until then, I think the better thing to do is just sit on your hands, because the bias changes so quickly. We were giga bullish like 4 hours ago, and now we are technically bearish. Like, it's hard to flip bias so fast. So just better sit out, in my opinion.
Sitting on your hands is a position. Being in cash is a position. This is something I've spoken about a number of times on my channel. People seem to think that trading means that you are constantly in a position, you're constantly monitoring your longs or your shorts. Good trading, as boring as it might sound, good trading is 90% of the time you're just waiting for things to happen. And that's perfectly okay. If you find yourself waiting for things to happen, if you find yourself sitting in cash and with alerts set on TradingView that haven't triggered yet, that is the default. That is the way you should be. That is, get comfortable being in that position, because that should be your default. Do you guys have anything more to add? Sorry, Alsbra, I know you were about to jump in there when Victor spoke.
No, I was just gonna say basically what Victor said. I think the approach is to be defensive. This is also what I've been explaining yesterday during the Twitch stream, during the morning stream as well. I think if you're able to book some profits, if you do leverage trading before the news, it's a very good thing. If you're not in a position, then obviously, as you just said, sit on your hands. and don't look for any position. And if you're already in a position, then manage your risk very very carefully, because as we just saw, things can go very 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 fast. I think minus 2k in less than 1 hour. That's huge. So yeah, manage your risk, take some partial profits if it's important for you to book some dollars, and go break even as much as you can, depending on your entry and on your trades. But yeah, defensive, I think, is the right approach.
Purdue, take us home.
Yeah, I think I just saw. I was in the back of my head. I remembered that you now have the Bybit tournament as well, and that's usually a time they usually do it in August. And I remember that's usually the worst PA ever during that tournament, because you have so many squads like pumping low volume coins and manipulating prices, and also market makers are doing the best to make it these guys as difficult as possible. So on top of the macroeconomic shit that we're all already dealing with, and also now the tensions in the Middle East, you also have that tournament that's running until the 15th of September. So yeah, I'd say indeed I have to take off my bull horns a bit and be cautiously defensive here at the moment. But it can change in a day. You don't like if we reclaim 112k again. I'd say you risk it for the biscuit again with your invalidation below the low we are going to make today. But usually we form tops and bottoms on CPI data or at the FOMC meetings. So it's going to be a pivotal point the next few weeks, in my opinion.
Yeah, it really is, strong opinions loosely held, and I think that has never been more applicable than the last few weeks of price action. When there's nothing wrong with changing your bias based on new information, and I think to be fair, there's a lot of flip flopping on the timeline at the moment, but I usually allow for a bit of that because I do think that we're traders, right? We that's exactly what we should be doing, is changing our bias based on new information. But that brings us up to the hour, ladies and gentlemen. So I just want to first of all thank our very very smart and handsome, because we all had webcams on today. Well, almost all of us. I want to thank our team of panelists for offering their insight and opinions on the market. Always a pleasure talking to this bunch of Giga Chads. I want to thank everyone in the audience for joining us for the last hour. Obviously, it is your time that we are spending on these calls, and we try and make it as valuable for possible. So thank you for giving us your time and giving us the floor and giving us your attention for the last 60 minutes. These are weekly calls. We'll be doing our next one next week, probably at the same time. Again, our idea is to try and set you up for the next 7 days, give you as much information as we can in order to inform your bias and your read on the markets from both a fundamental and technical point of view. But that's it, guys. So thank you very much. Enjoy the rest of your day. Stay safe. Big week ahead with PPI, CPI, and FOMC. In fact, the next call will be just before the next FOMC. So we'll catch you then. But yeah, I guess the advice from the panel is just to stay safe, play a bit defensive with your capital, and let the dust settle before getting into any high risk, high conviction plays. So thank you very much, guys. Enjoy the rest of your day. Peace.